Hey, good morning, guys. I haven't done obviously a member stream or any kind of stream really for a little while, so I thought, look, I'm back kind of looking at the charts a little bit. I've been doing bits and pieces as you've seen in the prop firm channel, but I just wanted to kind of cover basically what I've been posting in the musing channel this morning, and just cover a little bit of that kind of in the general sense. So ultimately, one of the things that I talked about was, let's come to the musing channel, was ultimately what I'm looking for on this, right? I still want the price up on the medium-ish term, right? So this is kind of the level that I'm looking at. Obviously, the Asia session overnight for me, pretty much sideways. So I'm expecting this kind of little sweep, right? So this is what I've just talked about here in terms of the sweep. So what I want to do is just kind of give a little bit of an idea in terms of why this, what this, and kind of where this is, right? So look, the bigger picture, if I get rid of some of these drawings a second, right, I'll get rid of obviously the indicators. This is something else that I'm working on, the counts and sweeps at the moment. I'll get rid of stochastic. And in the grand scheme of things, right, let's start out with get rid of this, and we get rid of this. Let's start out on a monthly, right? So in terms of the bigger picture, much bigger picture, this is currently what I'm seeing in terms of the monthly levels, right? So when I talk about a strong or a very hard kind of high, or a weak or a soft low, or vice versa, you could obviously have a weak high and a strong low, for example. But this is kind of the general sense, right? So from a purely mechanical point, what I'm looking at is, price comes down, we come back, we retest, we fail to make a new low there, but we also fail to make a new high there, right? And then we ultimately come on down. So for me, we've actually got these, lower highs, right? Lower highs formed, which clearly points down, right? So at that point in time, what I'm interested in is not really that much more than this, right? So we're obviously in some kind of larger downtrend. We've pushed back up, and clearly we failed to take these highs, right? So you've got obviously a nice high there, which ultimately formed the low. That one broke the structure to the downside, right? So there's clearly a very important high there. But on the way there, we made this little candle, right? And this is the auction area for me. This is the one thing that I've talked about for a long, long time, the auction areas, right? Now, if we were to put a little box on the auction, we just magnetize that a second, right? If I was to put a little box on that auction area there, just double check that's okay, and pull that out. As you can see, we tapped into, let me just make this a little bit lighter in case it's hard for you guys to see. So we tapped into that kind of auction area as a retest, right? And we've kind of rejected from it. We've come back. We've kind of maybe tagged there. Right? Let's see what the low is there. So the low is on this one. 12216 122. No, so actually we didn't actually tag into this one, right? So for me there's obviously a lot of selling pressure going on there, right? We've obviously rejected again a second time, so this one becomes obviously a primary candle. We've tested, we failed, we've tested, we failed, and therefore on a monthly down frame, at a time frame, I'm actually looking at this and saying to myself, well, overall bias is ultimately down, right? And we kind of down with a pullback. And this is a 3 month pullback, right? So you've got to appreciate, one, the time scale factors, and two, just the sheer size of a move like this. Now, you might say to yourself, how can I use this to trade, right? So the way that you'd use this to trade is you just have the bias, right? So for me, all I tend to do is I mark up on, a piece of paper, I mark up even on the charts, and I just put, kind of monthly down, right? And I could even make a second note with a little tiny little arrow like this, right? And literally, this is how simple I make this on myself, right? So I've got a monthly down pullback stage. Simple as that, right? Now, obviously, you could find your own ways of doing this. You can use colors. You could obviously make more detailed notes. This is just me kind of almost talking to myself, from an experience perspective in terms of where we are, right? Now, what I want to do, I want to use that information and say to myself, okay, so we're down with the pullback on the monthly. Now, what does that look like on the weekly? Well, if I stick the weekly levels on, what I'm seeing from a weekly point of view, right? Wrong one. What I'm seeing from a weekly point of view is we've rejected obviously from this high. We've come down and we've broken these swing lows as well as this swing low, right? So there's a lot of, a lot of kind of emphasis on that. We come down and closed. We've come back into the range, come again and closed, right? So momentum on the weekly is clearly down, right? Now, the only thing that we have here is, given that we know that the monthly is in the pullback stage, right? It's at this stage now, we can say this is the start of the pullback up on that monthly move up, right? So we can see that we've now broken the structure, right? So even with the best will in the world, if we were to turn bullish, we would still expect the price to come back into the range before kind of darting on it, right? So that again is how you start to kind of form your opinion, how you form your bias in terms of this, bigger picture, bigger move, right? So what I'm looking at right now is, how does this come down, right? What do we need to see for this to come down? What do we need to happen for this to come down? Well, in technical terms, for something to move down, you need liquidity from the upside, and the inverse obviously being true as well, is for something to move up, you ultimately need that liquidity from the downside. So what I'm going to do is I'm going to just kind of mark this out, very similar in terms of what I've done on the monthly. And I'm going to say to myself, look, I'm only talking to myself. So just like these little marks here, I'm literally going, well, we're currently in a pullback phase, right, on the weekly. Okay, so the pullback phase is, we've come up, we've come up, we've come up. However, we now have a pullback with a smaller pullback, right? Which means in theory, my lines for the weekly look like this, right? Almost the complete opposite to the monthly view, right? And this is what I'm doing in terms of, just like I said, talking to myself, right? So I'm now looking at this and I'm saying to myself, okay, so if we are now pointing up, but we're in a pullback phase of this weekly, I would anticipate the daily to be pointing down, right? So, clear as day, use the daily pointing down, right? Now, what I can do is I can take my high from the daily, I'll change this color again. I can change this high from the day, or mark this out from the daily, and I can say to myself, okay, well, what am I expecting now? Well, we had a high, right? We closed up above, right? And then immediately we come down and change that character, right? So at the moment, we don't have a full change of character. And the reason for that is we haven't only now finished making any form of pullback to this range, right? So what I'm expecting in an optimal world is for the price to look at pushing up a little bit here, right? And for this high on the daily to hold. Now, at this particular point, I know that my weekly was up with a pullback down. I know my monthly was ultimately down with a pullback up, right? And I'm using this again now to kind of just get an understanding in terms of where we are bigger picture. Now, one of the things I said to someone in the direct message the other day, and I know he'll hear this in the video and laugh, but the monthly time frame will affect the 5 minute, right? The 5 minute is not going to affect the monthly time frame, right? So what I'm doing is I'm working from, out on a monthly, and I understand that, we've got a 3 month worth of pointing up in terms of the monthly. I understand that the weekly obviously is, now starting to point down, but the pointing down also needs ultimately the pullback to grab its liquidity from the upside, right? So when I start to distill this, further and further and further, what I'm now looking at is, well, we clearly had the breach of this area here. So we're ultimately trying and testing for a move back into this range, right? So on the daily time frame, this is exactly what I'm looking for in terms of that daily move, daily push, right? However, to actually say, hey, jump in here, just had a hare run across the garden. That's nice. So ultimately, dropping down to another lower time frame, 4 hour, and basically copy, paste, repeat the process, which is why, this is actually a mechanical kind of system, mechanical kind of rules. Nothing really changes in terms of the bigger picture, right? So what I'm looking at now is I really want a dart up, right? Now we know that we want a dart up to actually complete the higher time frame pullbacks bigger picture pullbacks, right? So to do that, what I'm looking at is, well, what's this 4 hour telling me? Well, we've started from the same place as we did with the daily. We've come down, we've retested, we failed to make a high, we've come down, we've made a new low, right? So clear as day, we're in a downtrend, right? Now, we're in this downtrend until we're not, which means we've come up, we're back for the retest, and we're likely then to start pushing up from there, 4 hour, right? That 4 hour move up will be the beginning of the daily, right? And therefore, I'm hoping now you'll start to understand and appreciate how you can use this then to your advantage in terms of understanding what the higher time frame is looking for, or maybe what the higher time frame needs rather than what it's looking for. And then you're using the smaller time frames to, to get in almost a little bit earlier, rather than trying to anticipate the move. You're actually working with the chart to understand what it is you're trying to do, right? Now, obviously, at this particular point, I mentioned earlier that I'm working on this kind of counts and sweeps, right? Now, what I'm doing here is playing around with some of the things you might have already seen, right? We've talked about the CVD levels right now. I personally used to trade footprint charts, and the footprint charts give you a lot of information kind of inside the candlestick. However, it's a lot of information that really you don't need, right? And it can be very kind of confusing in terms of what you're looking for. If you're trading something like SPX on a 5 minute time frame or a minute time frame, yes, it can be very useful. But if you're looking for these longer, kind of scalping type trades that are not really scalping, they kind of medium terms, right? Or ultimately more of what I do, which is the longer term stuff, the footprint chart's not going to give you enough information. There's a lot of spoofing. There's a lot of things that go on behind the scenes, right? A lot of dark pools and things that it's almost like using the right tool. You're not going to go and take out a hammer if you're trying to screw in, a screw into the wall, right? The general idea is picking the right tool for the right job. So what the CVD does and what you've got in terms of the volume is always understanding where one, liquidity sits, and two, what kind of volume in terms of the liquidity is there, right? Because the market will always chase that higher form of liquidity, the bigger amount of liquidity, because that's ultimately where the big boys are making their money, right? So what I'm trying to do with this is to work on again a similar kind of take in terms of the Mayfair one, right? So you can see this is kind of overlapped. A lot of the information is the same information, and what I'm trying to do is to kind of pick out some of the areas of kind of interest, right? So a lot of where liquidity sits is going to be the previous day high, previous day low, previous week low, previous week high, etc., etc. Then obviously you've got where we've got week low, week highs, in kind of situ, and then you'll see these little numbers, right? So don't stress about this yet, right? This isn't something, this is almost too complicated for you guys to learn in this. But what I'm trying to do is to use this where I end up kind of refining the indicator enough that you guys can kind of make sense of what you're seeing on the chart, kind of there, right? So I'm not actually using this in terms of trading. I'm using this again just to kind of highlight and to kind of show you, what I'm looking at, kind of why I'm looking at this. So once you start to see, liquidity forming, you take that and kind of combine that with your overall bias from the larger mechanical, structure. This obviously is where you then get a lot more technical again. We can start looking at, where we are from an Elliott wave count, what we're looking at from a Wyckoff schematic kind of setup. And these are how these things kind of start to blend together, right? So what I'm trying to do right now is basically search for these CVD levels, right? And the CVD levels are basically just kind of spikes and changes in terms of volume that kind of give some hints, right? So, if you've read any of my books, you're going to understand what I've said about volume. I've talked about this in the educational content. So again, if, you're a lifetime member, you probably already watched at least me say this, once or twice. If you look at something like a small candle, and a small candle has a very very large volume spike, something's off, right? If you look at a very very large volume candle in terms of the size, but a very small volume movement, then again something's off, right? These are the types of things that will kind of give more clues in terms of what's going on bigger picture. So stripping it back to what I'm looking at, and the reason that I can turn these off and leave these off, right, is putting them on, turning them off, right? I'm seeing pretty much the same thing, right? We know that there's liquidity up here, right? We know that there's even little bits of liquidity up there, and we've just formed obviously liquidity up there, right? So at this particular point in time, there's an awful lot of liquidity there, probably a lot more than the liquidity that we've left on the table down here, right? Now, we know that we want to go back down there, right? Because that's our bigger monthly objective overall, right? And we know that's where the big picture is kind of heading. However, as I said right at the start of this video, for us to drop down, we need to go up, right? And therefore, the bias for me on these smaller time frames is let's go and collect this liquidity, and then let's continue with the daily time frame to the move down, right? The daily time frame will do exactly the same thing, right? It'll kind of give us a channel down, and then what it'll want to do is pull back into its range before it continues down. Okay, so when I'm looking at how I use this in terms of how I trade, what I'm trading with, how I can use this to my, to my advantage, is I'm just going through the same process kind of over and over and over again. Like I said, I can overlap Elliott, I can look at, volume numbers, I can look at, even down to the fixed range volume tool and see where we are. And all of these things are kind of saying the same thing, right? And they're all things that you can see without anything on your chart, right? There's no moving average, don't even need the stochastic. Again, a lot of what I do for the videos and the photos and things that I share in the Musing channel, a lot of it is, just to highlight to you guys, what I'm seeing, kind of how I'm looking at it, right? Over time, you guys will start to understand and appreciate that, almost less is more, and you get more clarity in terms of looking at these kind of naked charts, right? So, right now I'm looking at this and I'm saying to myself, right, well, overnight we had this kind of slow grind down. We ultimately need a sweep because I'm expecting a move up, right? That move up, obviously, target first is going to be this high. Target number two, this high. Target number three, this high. I could even say we could even end up back in this kind of range, right? But I'm not anticipating, a move like that today, right? What I'm looking for is now the smaller time frame to say, hey, are we ready for this move yet? Right. So let's drop down another time frame again. On this 1 hour time frame, what am I seeing? What are we doing? So I keep doing this with the pen tool. So on this 1 hour time frame, I know that I've got, a bit of a move up. Now, clear as day, one thing for me is we are, descending there, right? So I'd love to see a pop up, I'd love to see a pull back, I'd love to see a dart up, right? Now, again, if I overlap something like stochastic, let's see if any of that makes sense. Well, yeah, of course it does. Look at this, right? So what we're seeing right now is green volume coming into the play. We've literally come, a lot of people would have bought this early. This is where we're now collecting the stop losses. We've got nice little level, nice little number down here in terms of the sweep, right? And this is why I've said, come on, little sweepy, give me a nice entry. I've got this nice little sweep on the way down, and then ultimately, up we go, right? That's how I'm reading this kind of at the moment. Now, if I want to take this, another level, another layer, what I can do again is say to myself, right, same process, same concept, same tool, same system. What I'm going to do is say to myself, right, what am I seeing on a 15-minute time frame? Well, a 15-minute time frame, we've actually just seen, you know, a nice impulsive move up, right? This is kind of the clue. A sweep of all the stop losses, right? This is catching anybody that's getting in a bit early, right? This is obviously the next level. But what I want to see is obviously a push up. I want to see a pullback down that fails to make a new low again. And at this particular point, you've got, a half decent entry, right? And then, I'm saying we go in here, drop down a time frame again, go to 5 minute, for example, and, catch this kind of as early as you want, as early as you can. But in the grand scheme of things for me, right, I want to be looking at the 50-minute now. I'm going to stick the stochastic on. I'm hoping that we're obviously pointing up, right, or thereabouts. We're a bit of a false bar, right? So expect a bit of an accumulation phase around here. With the accumulation, we'd expect maybe a little Wyckoff spring, right? A little spring will obviously take out any more early stop losses. And therefore, it's kind of all saying the same thing, and this is kind of the point, right? So what I wanted to do is just kind of share with this. Like I said, I hadn't done one for a little while. I'd been back kind of looking at the charts last couple of days a little bit more. I actually got a plane overhead as well now, so I got rabbits in the garden and planes overhead. So yeah, so look, guys, look, in the grand scheme of things, this is how I'm currently looking at this. This is currently how um, I'm just kind of pushing the same thing kind of over and over, kind of every day at the moment. And I think the point being is if you guys are going through these prop accounts and prop challenges, it's been awesome to see more and more of you guys kind of passing these and getting through them. You're gonna jump in a bit early, right? I think just to kind of finish the video off with, what I want to do is kind of put a bit of a personal kind of take on this, right? So I've had a lot of DMs, from some of the members, saying, look, I kind of get the concept, but I'm jumping in a little bit early. I'm doing this and I'm doing that, or the indicator's not lining up. And I, I think this is kind of part of the point, right? This is why I'm saying kind of remove the indicators, right? Don't look at 15 pairs. I'm saying, forget where your moving averages are. If you want to trade like this in terms of doing, proper counts and getting through these, you're going to take a couple of knocks, right? This is not a, 100% winning kind of concept and idea. There's a much bigger strategy and a much bigger play when you overlap things like Elliott Wave, right? This is not me saying, hey, forget Elliott Wave, forget Wyckoff. This is me saying I'm trying to simplify it for you guys. To a point where you can take that monthly bias and, like I've just done, from a monthly and distill down to a 15-minute. You can take this kind of bias without any noise in the background, right? And that's really, really important. From a couple of messages that I've had with people kind of jumping in early, that's realistically the problem, right? So the entry model and the entry method on something like this is still down to you, right? It's still down to, how much risk, how much reward, what kind of time frame you're looking at. You can go right the way down, go on a minute time frame if you want with this type of technique. But in the general sense, what I'm looking for is alignment, right? Now, all I've been doing in the last couple of days, right, because I haven't been seeing much in terms of a big move, right? I'm kind of waiting for the big move. Optimal big move for me, right, is to push back up. We get back up here, and I kind of sell the shit out of this on the daily time frame, right? And that's a lot of pips in terms of big move. However, because we're not there yet, I'm not going to go against that bigger trend. I'm expecting a push up, right? I'm not going to take that push up because it's counter trend. That push up is going against my monthly bias, bigger picture, right? I know the daily is wanting to pull back up, but that's not an impulsive move back up. So all I'm doing is I'm looking for the kind of the smaller power plays. I'm going on a 15-minute time frame, I'm going on a 5-minute time frame, and all I'm doing is when we're breaking the character, right? So when we're actually changing the dynamic of the move. So let's just say we push up, right? We kind of push back down. Now, as soon as the price, because I know that I'm pointing up, as soon as the price is breaking this, all I'm doing is I'm going in very heavy, right? And I'm just taking 3, 4, 5 pips, and I'm doing that, once or twice a day. It's kind of pocket money, right? So at this particular point, nothing really big, nothing really, massive in terms of a big swing, big move for me. And I know a lot of you guys are looking at Aussie dollar. I look at Aussie dollar, obviously bigger picture, but for now with the euro, I'm quite happy taking this. It's a smaller spread, especially on accounts like FTMO. I've actually got a couple of other challenges slash um, obviously, I've passed quite a few of them now on some different accounts as well. So one of the ones I've been using recently, which I've shared in in the other channel, in the prop channel, was the instant funding account. So that's quite a cool one to look at. They're very very quick in terms of their payouts and stuff as well. So quite keen on that. The only downside was I think I took a 100k account on that, and you had to take um, the 4 grand, I think it was, or $4,000. You had to make that before you had any form of payout. So you had to keep 4,000 profit before you start taking payouts, above that. So that was the only downside. They don't actually put that into much of the information, but there was one clause in the fine print in the contract that said, look, you can kind of make money on this instantly, but ultimately it was you had to have a buffer, which was I think it was 5%, so it was $4,000 on a 80,000 euro account. All right, so anyway, hope you enjoyed this one. Thanks for watching, guys, and I will see you on the next stream.